Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 20th of August, Bull versus Bear webinar. Steve Miley here, back on the call for trading. Welcome, everyone. Welcome back to me, back from my vacation. And I'm actually only back here in the seat for a day. You have Duncan again tomorrow, but I'll be back more permanently from Friday. So me today, Duncan tomorrow, and then me Friday, and then you'll get me going forward, along with splutterings of Duncan as well. So I'm going to go through our usual regular run through here today. I'll take a look at the calendar, what we've had, what we've got coming up, take a look at the fundamentals, the news wires, what are the macroeconomic, geopolitical, fundamental, central bank, data-driven events that are shaping financial markets right here, right now. We'll take a look at the bond markets as well as the equity markets. What are the interest rate markets telling us? What are the Fed? You've got the Fed minutes this evening, what we're looking for from the Fed. And then we'll take a quick look at some of the technical analysis reports from market chartists that you can access if you're watching this live below where you are right now, below in the members area in the left-hand column, the daily technical analysis reports. So let's kick off with the calendar. Today's calendar is all going to be about the Fed. We've had some inflation data, slightly hot inflation data, higher than expected from the UK this morning, as you can see up here in green. Green not a positive because it's inflation, so higher than expected. You'll see that the German PPI better than expected, and European CPI data all bang in line with expectations. But going into this afternoon, it's all going to be about and the Fed, and also we've got Jackson Hole kicking off. So we get Waller speaking this morning at 11 o'clock Eastern time. Then this afternoon we get the Fed meeting minutes. So all eyes on there. Are we going to get any indication that at the last meeting there's going to be more pushing for potentially a rate cut and looking for potentially what we're looking at for that rate cut, which is now expected in September? And are we going to get potentially some bets going on a bigger rate cut, potentially a 50 basis point cut? So we'll be watching out for any information from those Fed meetings. The Fed meeting minutes usually don't tell us too much. Given that we've potentially got the Fed rate cut coming in September, I think these are, and then we've had a little bit of change with some of the data since the Fed meeting. It could be interesting to see what those minutes said. And since that meeting, there have been more of a sway in the market towards potential rate cuts. So it's going to be interesting to see, because if there's any kind of dovish tone in there, then the market's going to seize on that, and it could be give equity markets a boost. So certainly watching out for that. We also get Bostic speaking an hour later at 3 o'clock, and the Jackson Hole Symposium does kick off. That's not till this evening, and then in earnest, really, Jackson Hole kicks in tomorrow, Friday, and we're watching for speeches from Powell and other central bankers. Okay, so watching that, but mostly Powell's going to be really in the frame over the next couple of days. Switching to the earnings calendar, we're kind of taking not looking at this so much. We're earnings season behind us, but we do have this week some of the bigger retailers reporting. So we've had Lowe's today, we've got Target today. So although you see Lowe's and particularly Target in green in here, beating expectations, Target has tumbled lower on these numbers in here this morning. And then tomorrow we get Walmart. So Walmart, obviously a biggie as well, so we're keeping on that. Remember, this is kind of a reflection, Target, Walmart, a reflection of the US consumer. So we're watching out for those. See how the US consumer is holding up, given the potentially weakening jobs market, given the potentially still sticky inflation numbers in here. So these retail outlet numbers are certainly important. So keeping an eye. So we've had Target is down significantly this morning. Walmart we get tomorrow. And just as a heads up, it's a little way away. It's a whole week away. In fact, we do get the most important stock on the world right now, named by Goldman Sachs. Nvidia reporting in a week's time. So in a week's time, we'll be counting down. That's after the bell, remember. But that's a week away, next Wednesday. So that's going to be an important date for the diary in here. After the bell, on Wednesday next week. We get NVIDIA reporting. So watching out for that. We'll be talking about that more going into next week. Let's take a look. So we see sell off in US tech shares easy. So we have seen since last week, we made new record highs across the major indices. Tech has led the markets lower since basically last Friday through Monday and Tuesday. A significant move lower yesterday I think we were 1.5% down on the NASDAQ yesterday. So significant losses. But that's starting to ease off a little bit. But Target, as we said in here, Target tumbling lower in here after the data this morning. So in pre-market. So some slight negatives there, but the sell-off that we've seen, as I say, the sell-offs that we've seen in here in the tech sector sort of easing off a little bit going into this morning today already. So that's a slight positive there. Moving to the Bloomberg's morning briefings, America. Europe races to leverage Trump's support for Ukraine. So this is an important development in here that we've got going since last Friday's meeting, which didn't really, between Trump and Putin, didn't really yield anything of any real significance. But since then, the meetings between Trump, Zelensky of Ukraine, and then the coalition of the willing, as they're calling themselves, the kind of the European coalition, has sort of gathered some pace in here. There's been some shift in some of the rhetoric coming out from Trump. Who knows where that goes, but it seems that things are potentially moving forward in a slightly positive way. Now, see, it all depends on how Putin reacts to that, and he could just blow it off. But then, even if he blows that off, Trump is actually saying, well, if he walks away, if he doesn't do a deal and doesn't come to the table in the next couple of weeks, then there could be some more significant consequences. Potentially sanctions, potentially firmer support for Ukraine from a military perspective. So we'll have to wait and see on that. But certainly, things are shifting on this. And fairly quickly. So we need to keep an eye on that, and that can have a significant impact. So you can see covering that in here. Package of security guarantee. Federal Reserve's big annual meeting of central bankers. That's Jackson Hole. So that's kicking off, as I say, this evening. Powell's global peers to cheer for Fed in reboot to Trump. So basically, Trump's continued to put pressure on Powell, and potentially is going to be like a positive tone coming from other central bankers through that supportive of Powell. Intel has added to it, so .com flashback, Trump's meet with bosses. None of this really impacting significantly. Powell's global peers, we already just talked about that. Wall Street futures slip after tech sell-offs. Earnings, Fed meet in focus. So earnings, we already discussed those. Fed meet, so the Fed meet in focus, or the Fed meeting minutes really is what we're watching for today. Morning bid, tech angst on AI doubt. So again, just focusing on this tech sell-off that we've seen over the last few days. It's not a massive sell-off. We'll come to look at the chart shortly. You'll see that on the charts, the main support levels, even the initial smaller support levels are still very much intact for both the S&P and NASDAQ. And you have to remember, this is more of a rotation. So yesterday we were, I think, 1.5% down. But on an intraday basis, the Dow Jones actually made a new record high yesterday. So, here it is. Here, look, NASDAQ. So, look, Tuesday's tech shakeout led to 1.5% plunge in NASDAQ, even as the blue chip Dow Jones hits a record intraday high. So, you kind of look at the Dow Jones as like the old era stocks, even though they're not necessarily old era stocks these days. There's a lot of the new era stocks. But what it's showing is that's showing rotation, and that's not necessarily a bad thing for the broader market. Fed minutes could show whether Waller and Bowman had company in favouring rate cuts soon. So Waller and Bowman both looking for sooner and earlier rate cuts. And we're going to be watching out for Fed speakers over the next few weeks and after these minutes to see where that takes us and what we're looking for September for that rate cut. Nikkei followed US down overnight in here, 1.5%, but the Hang Seng was little change, slightly up. European markets in here mixed. Actually, the UK FTSE is up about just under 0.3. The German DAX down 0.3, and the French CAC little change going into the day. And US stock averages, thought I'd hit this, but let's just let this load up. Futures this morning, as you can see in here, little changed, slightly lower on the S&P and NASDAQ, down between 0.1 and 0.2%, and so markets are not really too impacted going into today after yesterday's sell-off. Let's turn to the Fed Watch tool in here, and we look at the September meeting now. So we're looking for 85% chance of a one rate cut, so a 25 basis point rate cut. But there is talk of potentially a bigger rate cut. That's not being priced in. but potentially bigger rate cuts now going into the end of the year. And we go to October now, you'll see in here 425 to 450 is where we're at. So there's now a 40% chance that we get a second rate cut. So we're only looking for one in September. And remember, by the end of the year, we were previously, the Fed was saying 2 rate cuts. We at one point, we almost backed off to less than 2 rate cuts being priced in by the end of the year. But now the market's pricing by October a second rate cut. So 25 and 25. And then December in here, look, that's here. This left-hand column in here is another rate cut. Okay, that's the third rate cut. You see the current target rate is 425 to 450, 350 to 375. So that's 325 basis points cuts in here. So the market's starting to price in near 25, 25, 25 for the next 3 meetings into year end. A 36% chance is not insignificant, right? And pretty much nailed on, though, that, in here that we'll get at least 2 rate cuts. There's only in here, these two added together is 17% chance that we don't get 2 rate cuts. We only get 1 rate cut. And then there is a 37% chance we get 3 rate cuts between now and the end of the year. On the yield side of things, let me just pop this out. You'll see in the markets in here have been moving slightly to higher yields, although just dipping down to lower yields more recently. This is the 10-year yield. So markets moving slightly to higher yields, but not particularly damaging stocks. That can sometimes be negative for stocks. And our outlook in here remains negative on price of higher yields in here. Although we've moved slightly to higher price recently, we're still bearish in here. Although markets are much more in a much bigger range in here, and they've been in that range for much of the second part of this year. So in here, you see markets in a wider range, but at the moment pointing lower in price. And that's right the way across 30s, 10s, 5s and 2s, looking so bearish on price. So they're pointing slightly to higher yields. On the stock indices, yes, we've dipped down from the all-time highs last week on both the S&P and NASDAQ. And you see in here, NASDAQ slightly more damaged in here, just zooming in a little bit more. You see slightly more damaged on the chart and here, but still holding above significant support levels and looking for a sort of bounce, looking for the underlying bullishness. So look, half of August rally has already faded, conviction dented, but still bullish for now. So we're staying bullish in here, still bullish, but conviction dips in here. So markets need to hold on and rebound, I would say, in here over the next 24 to 48 hours. And the Fed minutes could be that spur for that. Or we could get something out of Jackson Hole. Also tomorrow, remember, we get the flash PMI data. I think it is tomorrow, right? Let me just go back to the global flash PMI data tomorrow. So that could be the other thing that helps us out tomorrow. So on the outside, or it could be the opposite. It could actually then reinforce the bearishness. So I think the next 24 to 48 hours, what with the Fed and the global flash PMI data, we should get some kind of resolution to this kind of dip. Is it going to be a more significant sell-off on the stock indices, or are we going to get a rebound back up towards the highs? My money's still on the rebound, eternal bull. Still looking for that rebound in here. However, if it starts to break down supports, you have to go with those breakdowns of support. So watching out, I think that comes in the next 24 to 48 hours, whether we get the sell-off continuing or whether we get a turnaround and a rebound back up to the highs. All right, guys. So remembering here, going back to today, we're watching out for Fed speakers and the Fed minutes in here. So we get Waller this morning at 11, Fed minutes at 2. These are all Eastern time. Waller at 11, Fed minutes at 2. And Bostic at 3, and then Jackson Hole kicks off tonight. Plus, watching out for any developments regarding Ukraine-Russia. All right, guys, I'm going to wish you all a great trading day. Take care, stay safe, and Duncan will be back with you with another Bull versus Bear webinar tomorrow. Bye.